Okay, folks, this is Bob Desmond over at The Contrarian Trader, and welcome to this video, which is titled, Why Intel is a Long-Term Short. You may be asking yourself the question, where the hell have you been? Why didn't you say to short the stock back here at $37.36 at its all-time high if you're so good? And I'll answer the question with one word, and that one word is risk. There was far too much risk to short the name up here due to the fact that the path of least resistance remained higher. Now, we're going to use several charts. This is a daily chart. I use the daily chart as a timing mechanism, meaning I will use it to time my entry point when I want to get short. I will use the weekly chart to identify trends. I always like to say that the market sends us signals, and the weekly chart, the monthly chart are the best charts to use to pick up long-term trading opportunities. Not so much so the daily chart, and this is what I teach my members. The daily chart, which I like to term as being our 10,000-foot view of the battlefield, is far too noisy. Too much activity, too much volatility. What we like to do is pull back and use the weekly chart, which I like to call the 30,000-foot view. The monthly chart being the 60,000-foot view of the battlefield. And this is truly a battle. This is a business. Trading stocks is my business. So let's talk about Intel. We'll begin with the daily chart, and I'm going to actually contradict the title of the video by saying that I believe that Intel in the very short term is a buy. Yes, I just said it. Intel is a buy shorter term once it pulls back down to meet this lower band of this declining downtrend channel. We certainly don't want to go shorting Intel near this lower band because the probability of the stock finding support here and rallying up to this upper band of resistance is very, very high. Once again, we're going to worry about our risk. Why are we so overly concerned with risk when we're shorting stocks? It doesn't matter if it's Intel. It doesn't matter if it's an index. What matters is that by virtue of the fact that you are simply short of the market, your risk goes up dramatically. Why is that? Well, 80% of fund managers cannot short the market. The bias, 80% of the times, is to the upside in the stock market. We are heading into an election year, a presidential election cycle where a declining stock market is not good for the incumbents. We have a Federal Reserve, an activist Federal Reserve, which has a vested interest, a $4 trillion balance sheet, vested interest in ensuring that the stock market goes up so that everybody has the warm and fuzzies when they open up their 401k statement. If they do not, the politicians' phones will ring, and they in turn will ring Janet Yellen's telephone and drive her mad. Get this stock market moving higher. So the risk is against the shorts. Let's get to the charts. All right, so short-term daily chart, Intel is a buy once it hits this lower band of the declining downtrend channel and flashes bottoming action, as you saw back here on July the 7th, as you saw back here on the 8th, and as you saw back here on July the 15th, albeit it did not come back down and touch that support level, but it did flash a bullish key reversal and rallied up to the upper band of resistance. So as it stands right now, we're looking to buy Intel, look for a rally up to the upper band of resistance, and then we will look to short the name longer term. This is only a multi-day trade, whereas our short position will be a multi-week to a multi-month trade. Let's go to the weekly chart and discuss it further. Okay, so the weekly chart of Intel has been sending us signals. Remember earlier in the video I said the market sends you signals, and more often than not they will be found on the weekly and monthly charts far more clearer, and you could put far more confidence into your trade when you begin to see weekly support levels break. That is the key. So to the market signals, let's start with the RSI. You could see that 1 year ago, July of 2014, the back half of the month, we put in a high on Intel of $33.88. It pulled back, healthy pullback, rallied to put in a new high, yet RSI made a lower high. Intel pulled back, found support at $29.04 and rallied. RSI, lower high. Intel once again pulled back, found support at the $29 per share level, rallied another lower high on RSI. So what you have here is a divergence. While we saw a higher stock price, the RSI was sending you a signal Intel was losing momentum. It was also shown, but not as distinctly, on the slow stochastics. What else showed you that Intel was beginning to break down? Well, the price action. The price action is by far the most important indicator out there. And you could see that in July of 2014, we began to build the left shoulder of a head and shoulders setup. Fast forward then to December of 2014, and then into January of 2015, we formed the head of the head and shoulders setup. We corrected, pulled back, and then we formed the right shoulder of the head and shoulders setup. Now, last week, we completed a breakdown through the neckline of the head and shoulders setup. Now, could you call this right here, $30.30, a neckline? Absolutely you could. I prefer to take a more conservative approach to shorting stocks by watching the more extreme neckline break, because that's truly a confirming indicator that the stock is breaking down. And also you need to keep in mind that you have earnings season in front of you. I do not like to short stocks into earnings. I do not like to buy stocks into earnings. It becomes far too risky, unless, of course, the stock is either A, at extreme overbought levels, where I will be willing to open up a short position into earnings because the risk to reward is in your favor, or I will look to buy a stock that is at extreme oversold levels because the risk to reward is in my favor. So back to the weekly chart, we have the head and shoulders setup, which has now been confirmed. It's broken down through the neckline. Very, very bearish price action. I warned my members about this last week to keep an eye on it, and sure enough, hammered like a baby seal, cut right through that neckline on above average down volume. Now, this was all but in the cards the prior week, because the prior week we closed up on the week ever so slightly, but we formed a huge topping tail. And what this topping tail tells you is that there are a huge number of sellers that moved in and sold into strength, setting up the following week to be a very, very bearish down week, which did in fact take place. Now, do we want to only use the chart of Intel to confirm that it's safe to short the stock? No. What we want to do is we want to validate our opinion. So what we'll do is we'll go to the entire sector. We'll take a look at the entire sector using the same time periods, the weekly charts, the daily charts. Now, you can see that back in May of 2015, both the semiconductor sector in candlestick and in the black line chart, you have the XLK overlaid to show how they trade historically in tandem with each other. Now, they both each put in all-time highs, again, in May of 2015. They then each pulled back. However, in the beginning of July, the XLK began to rally, led by the triple Qs, whereas the semiconductor sector continued to break down. So in July of this year, we saw a divergence between the semiconductor sector, which became a laggard rather than trading with or outperforming the entire XLK. And what this observation provides us, it provides us with validation. It validates our opinion that the semiconductor sector as a whole is breaking down, is behaving poorly relative to the rest of the market, relative to the entire technology sector, and that we should not ignore this chart of Intel on a weekly basis, which is in fact breaking down, and that the path of least resistance has now changed from bullish to neutral, as observed by this sideways consolidation, to now being down, the path of least resistance now being to the downside. So I will caution those looking to get long of Intel, believing that it's a blue chip and it can't go down that much lower. It can. The charts are telling you it's going a lot lower. And I will argue that it's going down roughly 15% down to the $25 per share level, or even down as far as 20%, 25%, which would be at the $21 per share level. So we do have some support below. Now, if you got any value out of this video, I'm going to be producing another video today, and it's with regard to our short of Caterpillar. We are looking to short Caterpillar. I plan on sending out alerts to members when we do execute that trade. So please check out my blog for that video. If you want these videos in the future, please enter your email address on the website. They'll be sent right into your inbox. We do not spam. We hate spam too. Everybody have a great day. I'll talk to you soon.